Welcome, everybody. This is Trader Circle for February 8th, 2026. For those who are new here, pretty much we can think of this as like a group coaching session. So we pretty much all come together, pretty much ask me whatever questions you have, whatever you want to go over, whatever you want to learn. There is nothing such as a silly or stupid question, especially in the business of trading. I will tell you from experience and others that I've worked with. So with that being said, pretty much whatever you guys want to talk about, come off mute, put in the chat. It's all good. But yeah, we were talking about before I started recording with Zach, um, like futures and starting out. Or you just started what you said, less than a year or almost a year now, Zach?
Yeah, going on a year. I guess about 9 months right now.
Nice. Are you using your real money or like paper trading and stuff like that?
I'm using my real money, but I have done the paper trading. I don't know if this is the case on every platform, but Thinkorswim, it was extremely delayed as far as the price action was concerned. So
Mm.
it didn't seem, I should have probably paper traded for longer but yeah.
Or what are you using now as your platform?
I use Thinkorswim.
Gotcha. I think basically all you would have to do is when you go like into the settings, on the paper side, you just have to enable like the real-time uh, data.
God, okay, that's another very small thing that I wish I had known from the beginning, but thanks.
Of course. Um, Generally, if somebody's relatively new, I usually encourage people to like paper trade first until they establish some type of consistency. Just in the case, because I rather new traders not lose at least a lot of money. Because what I find ends up happening is if they lose too much money too quick, either they get discouraged, which of course is normal, right? You don't, nobody wants to lose money. But on top of that, some people might develop some, how can I say this? Not to be dramatic, but let's say like, I don't know, psychological scars, let's say, where they might like actually be afraid to even get into trades because of the money they've lost already and stuff like that. But yeah, that's what I would probably touch on that subject.
All right, thank you.
Cool. But yeah, any questions that you have, anybody else, whatever you guys want to go over, put it in the chat, come off mute, and we'll talk about it. What strategy do I trade? I trade the strategy. How about you, A? What do you trade? Can I go into detail? Yeah. I will do like a 5 minute summarized version of the strat since a lot of my videos are based on that. Uh, Let me bring up the ebook so it could be a little easier for us to follow along. My computer is a jet engine. Let's turn this one off. All right. Where is the strat ebook? There we go. All right. The strat is complicated. The strat is the easiest thing I've ever traded in my whole life, but we'll talk about it. You guys can see my screen, right? All right, cool. Let's go from the beginning. Uh, let's start at the strat candle numbers. And people usually ask me, why do you have numbers on your screen? All right, we'll bring the participants here. Hey, welcome, Mario. Hey, Tawa. All right, so again, I'm gonna keep this pretty quick because I have like a whole section on my YouTube going over everything about the strat, but we'll briefly talk about it. So the strat is essentially there's three scenarios for the strat. It's a price action based strategy where you don't need any indicators. It's basically just whatever price is doing, right? The strat, we are reacting to what price is doing. We're never proactive in getting into trades. And I'll give you guys an example of that later on. So with the strat, as I mentioned, there's three scenarios, right? There's an inside bar, which is essentially going to be, as the name suggests, an inside bar here. We can see this example. Let me get my little annotate tool. So we have this bar here. It does not break the previous high and low of the previous candle, as we can see here, making it an inside bar. And then we have a two bar, which is pretty much just signifies direction. So let's say we have this one right here, this red one that breaks this low. We would call this as a two down candle. Or if it breaks the previous high, a two up candle. And then the last scenario is going to be a three candle, which some of you may know as a mother bar, an outside bar, things like that. It can break the bottom, which becomes a two, and then breaks the top on the same candle, which then becomes a three up. Or it breaks the top first, becoming a two up, then the bottom, becoming a three down. Making sense so far? What time frame do I recommend for the strategy? We can definitely go over that next. So pretty much with the different strat setups, there's many different setups like, in this case, a 2-2 bullish continuation, reversals, 2-1-2 bullish, bearish, X, Y, and Z, reversals, continuation, so on and so forth, as we have here. You don't really need to memorize all of these, in my opinion. With Rob Smith, the creator of the strat, he always says that you should just focus on two or three setups first, usually like a 2-1-2, a 2-2 reversal or 2-2 continuation, or a 3-1-2 continuation reversal. Just keeping it simple in the beginning, and then from there you can expand on it, right? Hey, welcome, Tanvir. Glad you were able to join. So this is it pretty much for the numbers. The other area of the strat, which people usually get lazy on, is going to be, well, actually, let me go to entries and exits first. So with the strat, what makes it pretty simple, in my opinion, is that it tells you when to get in, when to get out, and pretty much when to do nothing. So when it comes to entries, pretty straightforward. Let's say this green candle, let me circle it real quick. This green candle here that we have. Let's say it's an inside bar, right? It hasn't broken the top of this candle yet. So as soon as this candle breaks this candle high, we're immediately going to go long, whether it's buying shares, buying calls, selling puts, whatever bullish strategy you may have at the time, right? And we never wait as strat users until the candle closes. We always get in as soon as the candle breaks. If you get in when the candle closes, you're probably going to be late to the move. And with targets, pretty straightforward. The targets, in this case, since we're going long, it's going to be the previous candle highs, as we have here. And then if we're going to be going short, pretty much going to be the previous candle lows. And I'll show you guys some examples on the chart in a bit. The next component of the strat, stop losses, I'll go when I go in my chart, so I can show you guys three different examples of the stop loss. So we'll skip this for now. So full time frame continuity, which is essentially, we're looking to have more time frames in our direction just to have more probability for the trade. Now, there are setups that you can take that are against the trend. However, you'll probably find more success in the beginning with just going with the trend as opposed to going against it. And I'll show you some examples that new strat users tend to do, which is a mistake in my opinion. So generally, we want as many timeframes to be in our direction when we're getting into these trades. Full time frame continuity, it's not that big of a deal for me personally when I'm day trading because I'm just going to be in and out. I'm not really holding for that long. If I'm swing trading, I'll probably see what overall that specific stock or ticker is doing just to get a better grip on it. We can skip time flip for now. Broadening formations is the third component of the strat. Pretty much it's our support and resistance. And basically, Rob Smith always said, price doesn't stop at a specific point on a straight line, right? It's usually like a little angled. So as we can see here in this example that they have down here, instead of prices, let's say we have a candle there, and then another candle here. And let's say this is resistance and support is down here. Price is not going to perfectly come up and reject off that level. Sometimes it will, but usually not for the most part. And then when it's coming down, it's not going to perfectly stop on that candle and then reverse back up, right? So usually price is going to be stopping, as we see in this example here, it's going to reject there, then it's going to reject a little higher, going to bounce off here, bounce off a little lower before reversing in whatever direction. We have some more examples over here that can be a little hard to see. It's a little small, but before I go to my charts, any questions so far? Making sense? Confusing?
Yeah, this makes more sense than other. My first introduction kind of gave me the impression that I would need to memorize each like 2, 3, 1, etc. So
Gotcha. Yeah, you definitely do not need to memorize none of that. It's more so just like as you're journaling your trade, it's like, all right, which ones do I prefer to go for? Like, do I prefer to go for inside bar setups on the 4 hour, the 1 hour, 5 minute, whatever it may be? So to answer your question, A, regarding the time frame, when I'm day trading, specifically options, I don't want to babysit my trade that much. So I'm pretty much just looking at it to take the trade on the 4 hour. So it pretty much limits me to two trades a day. I'm either going to take a two up or two down, or a three up or three down, depending what happens. So let me go to Tesla and I'll go over a trade that I took on Friday. Let's hide this for now, and we'll hide this as well. So for Tesla, the trade was pretty straightforward. We had a 2-1 that it closed on Thursday. Oh, one thing to note, when it comes to the strat, you don't use extended data because the candle setups are going to be very different and they're going to change, they're going to flip at different time frames. So for example, we can see here for the 4 hour with regular trading hours, the first 4 hour candle is at 9:30 a.m. Eastern. The second one is at 1:30 Eastern time. So if I go to, let's say, extended hours, these are way different, right? They're printing every 4 hours. So at 4 p.m., 4 in the morning, 8 a.m., 12 noon, so on and so forth, right? So always make sure that you have regular trading hours on. While some people do use extended trading hours, I would probably recommend that down the line once you're fully comfortable with the strat and you've got an experience under your belt regarding it. Cool. All right, going back to the trade for Friday. So this trade on Friday, pretty straightforward. I had my stop loss a little under halfway. And then the first strat target, yeah, for futures, you can definitely use extended hours, especially catching those reversals during London, which are very nice. So pretty much as we have right here, we have a 2-1 setup, and then I pretty much took this 2 up on the 4 hour time frame. You can use the bodies as well if you want. Just use your discretion and whatever you prefer. So if we were using the bodies and the wicks, this will be target 1. We'll have target 2 here, 3, 4, so on and so forth. So pretty much as soon as this 4 hour candle opened up and triggered this level, I pretty much immediately got into calls. and I set my alerts at my targets. My first target was at the top of this. I didn't really use the body, but again, I leave that up to you guys and what works best for you. Sometimes I use the bodies, sometimes I won't. So pretty much got in and just waited until it hit my target. Now, I wouldn't recommend doing this in the beginning just yet. I just add Fibonacci retracements to my chart as well, just to get additional targets. Because we can see from this target here to this next one, it's about $11 away, right? Me personally, especially for Tesla, I'm not going to hold during an 11 point or $11 move until the next target. So I'm going to want to take profit as it continues to go in my favor, but at other levels, right? So I pretty much use fibs in conjunction with the strat targets to get additional levels for, targets and such. So after I took some off here, I took some off at this 50 and then this 61 fib, and I was pretty much done there. I didn't really wait anymore because I didn't want to be on the charts any longer. But we can see that at least using Fibonacci retracements, we can have additional targets as it goes to our other strat targets. Because you don't want to have price come all the way up here, right about to hit your target, and then it reverses all the way back down. Questions so far? Making sense?
Yeah, definitely making sense. As far as the Fibonacci retracements are concerned, like, let's say we're working with a small account and we can only get like one or two contracts. Would you then suggest integrating the Fibonacci retracements earlier than just going for the full top of that candle body or wick?
I'd say in this case, the way I would approach it is, let's say I have $1,000 account and I don't want to use more than $100 a trade. Let's just say I just have enough money for one contract at $100. Pretty much what I'll just be doing is just taking it off at the first target, just making sure that the risk reward is at least 1 to 1, because I don't want to risk $100 or whatever it may be to make like $50, right? So I'll probably just continue doing that until my account gets bigger, so then I can afford more contracts, depending what it is that I'm trading, right?
All right, great, thanks.
Of course. But yeah, when it comes to day trading for options, I like 95% of all of the trades that I take is just off the 4 hour. Some people use the lower ones. I only really go down to the lower ones if I'm looking for like a pullback or TTO setup. But otherwise, I'm just using the 4 hour because I don't want to babysit it. When I'm trading futures though, for futures, I trade it a little differently. I don't use the 4 hour that much unless the setup is really good. But this is pretty much how I trade futures. I have the 5 minute, 15 minute, 30 minute, and then the 1 hour. And then I'll mark off like the previous week high and low and the daily high and low. That way I don't need to like go to those time frames. I just have everything set here. All right. And then for swing trading, for those who do that, I mainly just swing trade on the weekly time frame, but I also incorporate the daily and the monthly sometimes if the setup is there. For those who trade options, you just want to have time on your side, right? Like if I'm trading anything on the daily, I want at least 2 weeks or more. I generally go for 30 days, but at least 2 weeks or more. And if it's the weekly time frame, I'm going to go out at least 30 days, no less than that. What are the questions that you guys have? You can come off mute, put it in the chat, whatever you'd like. What is the typical win rate for the strat? It varies. I'd say for my 4 hour setup, and it fluctuates between 70 and 75%. Some others can be a little higher, some a little lower. It depends. But on average, like my overall win rate since I started trading is about, I think, 65 or 66.5%. Speaking about win rate, what I forgot to mention that new strat traders tend to do. As I mentioned to you guys, I use the 4 hour to trade options, right? I find a lot of new beginners to the strat, they'll go on the 5 minute and they're like, let me take this, you know, let me take this two down, two up. Let me take this random reversal. Generally, you want to have a plan to go with this with the setup. You don't want to just take randomly like a random 2-1-2 or a 3-1-2 or whatever it may be on the lower time frames. I'm more lenient when it comes to the higher time frame, like the 4 hour or daily. I'll kind of just take it in and of itself. And if there are additional pieces of confluence there, I'll take that too. But for anything under like the 4 hour, I want to have more of a story with that setup, right? I'll give you an example for this setup that we will name the 3 bar play because I don't have anything else to call it. It was on NQ on the 5 minutes. I think it was last Tuesday. There we go. All right, so the 3 bar play, it needs to look and have these characteristics. And I'll show you side by side with an example that we wouldn't take. So the 3 bar play, pretty straightforward, is just for those who know the strat, you can think of it similarly to like a Momo hammer or a Momo shooter setup. So let's look at these 3 bars here. And the idea is we're waiting for either a big drop or a push up. In this case, we'll just go over the bearish example because that's the one that we have here. And then we're looking for price to kind of consolidate or like kind of chop for a little bit. In this case, we have this inside bar with nice big solid candles. And then the next candle, pretty much another solid bodied candle, pretty much breaks it and we go to the downside. Now, an example that you don't want to take, this is going to be on the S&P, this on the same exact day. Was on the 3rd. So even though ES had a similar like 2-1-2 setup, this is what we want to see. We want to see the big drop and then consolidation and then the continued move, right? I don't really want to see price like kind of slowly chopping and then printing that setup. I want it to look like this: big drop, consolidation, and then we take the continuation to the downside. Of course, we don't know if it's going to continue to the downside as because this is just prior data, but at least back testing and from what I've taken live, after we get this specific setup right here, price tends to continue going in that direction. Now, when it comes to, let's say, our targets and our stop losses and things like that, of course, we're going to enter in as soon as it breaks. Stop loss is going to be right above the candle that got you in. So this candle right here. So pretty much in this case, we would have a 58-point stop. Obviously, we don't want to use a micro. I mean, a mini. We want to use a micro if you're trading futures. One thing to note, this is pretty much the NASDAQ. So for those who trade options or regular shares, exact same setup, just using options or stock instead. It's universal, as I mentioned earlier. One thing that I found for this setup to be a good, let's say, reward area, instead of doing like a one-to-one risk reward where you're like taking profit, let's say in this case, every 58 points, I would probably start taking profit every 1.5. So whatever that may be. in this case, 88 points, then I can start taking some profit off. However, based on the ones that I've seen and that I've taken, I have found that using just a risk reward of 1 to 2, so let's say risking $100 to make $200, works best because it tends to go more than 2R on the trade. So something to keep in mind if you guys are going to practice and paper trade this and incorporate it into your own strategy. Any questions on that before I continue? Making sense? Confusing? Cool. I'm not sure if you were the one that asked this question in the questionnaire, but was it you that said you wanted to know where to start with futures? In the meantime, what other questions do you guys have? Well, where to start with futures? All right, let's go to a mini futures class real quick. Zach, since you trade, you said you do QQQ and SPY, you said?
Yes, that's right.
So I'll go to the micro S&P for futures. So let's type on the screen. So when it comes to futures, there's ES, which is the mini contract. Well, and then there's MES, which is the micro contract. And the way futures works, you'll probably hear people say like, oh, like it moved 10 points or the Dow was down 200 points today. When it comes to futures, we use the terminology like points as opposed to, the Dow is down $100. So we would use points in this example. So each futures contract moves a little differently, where some either move in points, some in each increment of movement, we would call that a tick. So in the S&P example, it moves in increments of 25 cents. So one tick is equivalent to 25-cent movement. So we can see here on the right, it's not moving like at 51 cents, then 70 cents. It's just 25, 50, 75, the next point, right? So there is $50 uh, per point, and there is 12.50 per tick. And there's 4 ticks in 1 point. And then for the micro contract, it's just going to be a tenth of the value. So $5, whoops, per point, $1.25 per tick, and then the same thing, 4 ticks in a point. So let's open up a trade, a random one, just to get in and show you guys. Let's just buy market. I'm going to buy, let's do two contracts. We'll buy that at market. So now I'm in this futures trade with two micros. Now remember, because one micro is $5 a point and then 1.25 per tick, I'm making $2.50 a tick because I have two contracts. Pretty much just multiply it by two, right? And actually, let's just sell one. Uh, Let me sell one to show one example a little easier. All right. So we got in at 68.50. Right now we're down roughly 2 points from entry. So we're down $5, right? I mean, $10. We're down 2 points. Now, what I enjoy about futures is that one, you can pretty much trade it during Asia, during London, and pretty much New York session. So it's open 23 hours, 6 days a week. So Sunday through Friday. So it closes at 5 p.m. Eastern, opens back up at 6 p.m. Eastern time. And what I enjoy about it is I don't need to worry about theta, choosing expiration dates, and all that other good stuff, right? Like options. So let's say if I put my stop loss about 7 points away, which will be the equivalent of $35. And then let's say the same thing. Let's say I move my stop loss up here at 10 points, pretty much a profit of $40 if it hits. Price can chop for the next few hours up and down. As long as it doesn't hit my stop loss or my take profit, it's pretty much, I'm not going to lose value just because I have the position open like options when it comes to theta, right? As long as it doesn't hit my stop loss or take profit, I'm going to stay in the trade. And I'm only going to lose value or gain value in proportion where I got in and where price is currently at. Any questions on that so far? Making sense? Anything I need to clear up?
Making sense to me, yes.
Cool. One thing to note that with futures, it works differently than options, assuming you have a cash account for options. Futures requires margin, right? So it's not like I'm gonna, let's say, I'm not gonna buy a futures contract for like 200 bucks, right? You're more so just putting the margin up for that trade. So let's say, let's give some examples on the margin requirements. So let's say, and each broker and platform that you use is going to be different. Like Zach, since you use Thinkorswim, as do I mainly use it for options. To me, Thinkorswim for futures is a little expensive and the margin requirements are super high. So let's say for Tradeovate, they require you to have $50. Uh, let's say for the S for MES. So $50 per micro contract. Generally, I like to add at least 3 to 4 times the amount in my account per micro that I have, just so I have wiggle room, right? Because if you only have, let's say, $50 in the account, and then you get into this trade, which you need at least $50 in the account of margin, if you go under $50, they're immediately going to liquidate and close your position because you don't have the margin requirements to have that trade open. Now, let's say if you are at 100 bucks account value, we can see that I'm only down about 15 bucks right now, which will bring the account value down to about $85. As long as it doesn't go to $50 or less, I'm going to stay in that position for as long as it takes until it hits my take profit or stop loss. Now, that margin requirement right here is just going to be for intraday margin. So that's going to be from 6 p.m. Eastern to 5 p.m. Eastern. During that closing time from 5 to 6 p.m. or over the weekend before it opens back up on Sunday, you need what's called initial margin. The initial margin is always going to be super high. So I think the initial margin for MES on average is about either depending the broker you use, between 1,400 to like 22, 2,500, something like that, at least last I checked. So if you're going to swing trade futures, you want to make sure you have the initial margin to even open up that trade overnight. Because if you don't, they're going to automatically liquidate your position at market close, or they're going to reject the trade. Questions on that before we continue? Yeah, I find futures pretty beginner friendly because to me it's similar to trading regular stock, right? Because regular stock we're pretty much going long or we're going short and stuff like that. So same concept for futures. You're either buying long or you're buying or you're selling short. Pretty much it. The biggest thing is just making sure that you're sized accordingly and you don't over leverage because it can be a little easy to do that depending the platform that you use. And it's probably best that you don't blow accounts. So risk management is always important to have. And for those coming from trading options, I like to think of futures as like you can make your own delta, right? So let's say you get into a SPY contract that has a delta of, let's say, 0.10. Approximately, you're going to make $10 for every dollar that it goes in your favor. Of course, it's going to increase, but let's just use 10 as a flat example. For futures, same thing, right? Let's say for MES, if you get 3 micro contracts, you pretty much have a delta of 15. So for every point it goes for or against you, you're going to make or lose $15. Cool. What else you guys have for me? My journey? Ooh, I'll try to keep it in a 5 minute short story since I tend to talk a lot. So I started trading back in June of 2020. So I've been trading for pretty much a little over 5 years now, 5.5 years, give or take. Super random. I was like never into finance, never into like all this like business money stuff. And then one day my friend called me. He's like, "Hey man, buy Boeing stock." I'm like, I don't even know how to buy stock. So he made me download Robinhood. I bought Boeing, and then I think I pretty much like doubled my account in like a week or two. And I was like blown away. I was like, I just like made money by pressing buttons. Like it can't be this easy. Which of course, as I always say, the first one's free. Ended up putting my own money in, and I pretty much shredded half of that in like a month. And I'm like, all right, I need to learn this properly because clearly I don't know what I'm doing. And then another one of my buddies, he found our first mentor. So our first mentor pretty much had us starting off with trading penny stocks, usually like low float ones with low outstanding shares, so price could be manipulated, or maybe not using the term manipulated, but it moves a lot more than stocks that have a lot more outstanding shares and stuff like that for the open market to trade. So I started out trading penny stocks, and then a few months later, I got into options by myself. From there, I got into Forex. My cousin's been trading that for like probably 12, 14 years now. Wish he told me about this way sooner, but we're here now. But yeah, I started trading Forex for a little bit. And then from there, I discovered futures, where another one of my mentors, put me onto it. And yeah, I pretty much mainly been trading options and futures as my go-to. Every now and then, like I'll trade a penny stock or something that used to be a penny stock to short it back down. Um, but most of my trades are all options and futures. I do trade crypto here and there, but just like long-term stuff, I don't like actively trade it anymore because it messes with my sleep schedule. I mainly trade the New York session, so if I start to get into crypto a lot more as I used to, I'll like wake up in the middle of the night, look at a chart, and now I'm up for like an hour, seeing what Bitcoin's doing or whatever or something else is doing. How long did it take for me to be consistently profitable? I'd say about 2 years and change, maybe a little less, like around the 2 year mark. I don't really count the first like half year or year that I was trading because my mentor was pretty much giving me like all his good trades. So I pretty much was making a ton of money, but just off of his ideas, not mine. But yeah, it wasn't until like after the second half of the first year that I started like studying a lot to try to find my own trades, right? Well, I did, and I will always appreciate my first mentor and learning everything I did from him and what all the money that he made me. I wanted to learn how to trade by myself, and I have to rely on him. So pretty much went down the deep end on YouTube and anything else that I can find. The biggest thing that helped me a lot, which made me quit my job, was the strat, right? It was by chance. One of my buddies that I haven't seen in a long time, he's like, "Hey man, this guy on like Instagram or whatever." He's like, "Hey, he's selling his course for like $50. He made like 100K on I think like Netflix or something." And he's like, "Yeah, his course $50. You can get in his group and all this other stuff." I'm like, "Sure, $50. What can I lose?" Um, got in his group. They were all talking about the strat, and I learned from that individual and four other strat mentors that were in that group. And here I am now, also sharing the strat with other people as well. One of the biggest things, though, that helped me to be consistent besides the strategy was the trading psychology or mindset portion of trading. Understanding a strategy is one thing, right? But if you can't properly execute it, or if you're like over leveraging or you're revenge trading, then it's not going to work, even if you have the best strategy of all time, right? So trading psychology is definitely a big thing as well. For those of you here that may know me from my YouTube channel or that are watching from my YouTube channel, I have pretty much like an entire section dedicated to like trading psychology stuff. That's pretty much why I started the YouTube channel and pretty much coaching people. I just started adding the technical and like strategy side of people like, hey, teach me how to trade too. I'm like, all right. But yeah, to me, one of the biggest portions is the mentality and mindset side of things. Because you need to learn how to manage yourself and manage your emotions and everything else that comes with trading, right? I'm sure you guys have heard the phrase or the term, trading is you against you, right? If we're all looking at the same setup, we should generally have a similar result, right? But that's usually not the case. Somebody may have gotten in late. Somebody may have gotten in early because they were feeling FOMO. Somebody might have over leveraged, or they might have gotten in early, lost, and revenge traded. Many things can happen, right? So you also want to make sure that you spend some time developing the psychological side when it comes to trading. What books do I recommend? Let's see. Think and Grow Rich is definitely a good one, at least like mentality wise. I enjoy that one. Trading wise, The Mental Game of Trading by Jared Tendler, super good. The Best Loser Wins by Tom Hogard, definitely love that one. Highly recommend. I read it like 2 times already. My brother gave me Trading for a Living a long time ago. Let's see, what else do I have? I think I might have it in my closet somewhere. There's probably some more. No, that's actually a podcast. Hold on, I have a list here that I made. There's a link in the chat that I'm gonna post for you guys. I made like a compilation. Ooh, the Candlestick Bible. Highly recommend that if you're new to trading. The Playbook by Mike Bellafiore. Highly recommend that one as well. He is the, I think, owner and one of the founders of SMB Capital, like a prop firm in New York. Definitely good stuff. I was like going through all their YouTube content like in 2021, which helped me a lot. Let's see what else. Ooh, The Disciplined Trader. I have that on an audiobook. I don't have the actual book on me. What else do I have? Ooh, Mastering the Trade. I think like the first quarter or the first third of the book I found relevant to like for me and trading. The other portions of it for Master the Trade, he kind of goes into like strategy, like and stuff like that he does. But I don't, I have my own strategy, so I kind of like I listened to it, but didn't really care too much regarding that. The Psychology of Money is another good one, and Trading in the Zone is another good one. So definitely recommend those. I think I have them in the Google Docs that I shared with you guys there. And for those who are watching the recording on YouTube for this, it'll be in the description that I'll put that link in. Cool. Uh, about 7, 8 more minutes. What else do you guys want to go over? Anything at all? Strategy, where you're at in your trading, any tips that you may want, literally anything. Oh, by the way, Tawa, if you can hear me, send me a message on Discord when you can. I think you made like a second profile or something, or a second username.
Yeah, I've been having some problem because I have so many bots on
Hmm.
my and so many imposters on your this thing, so I had to delete so many. And I don't see you anymore. So,
If you can, I'm going to email you when we're done here,
okay.
and I'll send you my username the exact way it looks like.
O-
So, because people like to impersonate me, which I guess that means I made it. Apparently, I'm famous.
Yeah.
Uh, but yeah, I'll send you just mine, and if it's not that chat, don't bother responding to it, because I will never ever message anybody talking about, hey, you want to copy trade or you want to do this or sign up. I will never do that stuff. For those who know me, I post my watch list, and what's on my watch list is what I do. And if I do anything else, I would openly share it with the group. I would never DM anybody talking about this cool trading thing that I found. So always be
Can
my
you send me an invite because I don't even see you anymore?
Yeah, I'll send you the direct invite in through the email when we're done here. And then send me a friend request too, so I can have you like in the chat. Hey, my pleasure, Thompson. Thanks for coming in. Hey, thank you. Oh, almost forgot. The psychology presentation is going to be this Thursday at 9:15 or yeah, 9:15 a.m. when I start. So if you guys do want to attend that, I think the website is TPC, so tradingpsychologyconference.com. If not, I'll put it in the description of this video as well on YouTube when I post it tomorrow. It's free to sign up. So if you guys want to see my presentation on journaling, I pretty much go over the entire journaling process and what I journal and stuff like that. And there'll be other speakers there. And I think pretty big, at least from what I saw, trading psychologists there too. So definitely attend it if you can. I'm sure it'll be recorded. I'm just not sure if they'll put it out right away after it's been completed, but yeah. Let's see. I've mainly been trading SMC. Do you find that approach works well with the strat? I don't necessarily trade SMC concepts, maybe like ICT concepts, which are similar. I wouldn't necessarily, you can combine them to just keep it simple. Like let's say, for the sake of the conversation, I haven't studied SMC in a while, but from what I remember, you guys use divergences in SMC, right? Like let's say if ES or SPY and QQ have a divergence, You'll like look to take a trade, whether it's long or short, depending on what you see. Cool. All right, so let's just say for the sake of the conversation, so we'll have SPY on this side, and then we'll have QQQ on this side. So from what I remember, let's just say we form a higher low and then price reverses to the upside. Or even before price reverses, we're making a high on SPY. But on QQQ, we're falling, right? So if I'm understanding the concept correctly, let's say price reverses on SPY, we will take this to the upside. I'm sure QQ will probably reverse later on, but we can take the reversal to the upside, I'd imagine. You guys can correct me if I'm wrong. Again, I don't study SMC like that, but I'm trying to combine the strat and SMC in this example. So in this case, let's look at SPY, right? We have pretty much a double bottom or a W set up here. Now, if we get, let's say, the divergence where this is making a lower low, but this is making a higher low, I may want to take a bullish reversal on SPY to the upside as a strat trade. So you can probably combine them both in an aspect like that, right? Like if one is making a lower low or lower high, you're going to short or go long. You can use the strat to get into the trade, as opposed to maybe SMC might have you getting in like when it breaks the middle area, like up here, where the strat is getting you like all the way down here, right? I think there was actually a W on silver. Was it silver? Was it the daily? GC, I think that's what it was on. Yeah. There we go. All right, cool. So pretty much here on gold on the 12-hour with extended data on, we have this pretty much this W or double bottom setup. So we're pretty much just looking for the higher low, which printed here, and then we're basically taking the first bullish reversal, which happened right here. So to me, this trade would probably look something like this. And then, we're just targeting like these highs up here. First target is going to be the center here, either the body or the wick. And then, this body up here or the wick. I would never take this trade on futures because that stop loss is insane. I think that's like 2,500 per micro, which is way outside of my risk tolerance for futures. But if you're trading gold, like for futures, I mean, not futures, options or regular stock, you can just swing trade shares or just swing trade options instead. So again, same exact chart, maybe a little different because it's just not showing the same thing as futures, but you can probably aim for that gap fill right here. So first target would be either this candle or this candle, and then I'll probably use this one as well, and then see if we can fill that gap and just call it a day there. But yeah, this is essentially what I was saying earlier in the beginning of the session where I want some additional confluence with the strat setup. Like I'm not just taking a random bullish reversal to the upside, right? Just bring it back to the absolute basics of trading, right? If we're on let me actually bring it lower. So if we're on a downtrend, we don't want to go long because we're just making lower lows and lower highs, right? So the idea behind the double bottom or the W is that we're coming up to make that lower high. And instead of making the lower low, we're making the lower high or the higher low rather. And then if price is reversing, what is that telling us? What is the story behind what the chart is giving us? It's letting us know that back here, the sellers were pretty much strong the whole time and buyers couldn't keep it up. However, it looks like sellers are being exhausted and buyers are finally stepping in to reverse price and changing market structure. So instead of market structure being bearish, as we have here with these lower lows and lower highs, we're getting this low and then a higher low here. We break this high, making a higher high. So now market structure has shifted to the bullish side. We're just using the strat to get in the beginning of the move. Because traditionally, when it comes to a double bottom setup, people are getting in once the neckline, which will be right here, once price closes above there, then they'll get in long. But we're getting in on the first reversal. But yeah, hopefully that all made sense. Before we wrap up, isn't that risking? Like risking like getting into the reversal? It can be risky. In my opinion, at least these are one of my best setups. I've been taking it for what, 3, 4 years now. And to me, it's like I would probably say my best setup out of all the ones that I've taken. Because the risk is pretty manageable, right? In this case, this is the 12-hour, so the range is going to be a lot higher at $15. But generally, I take these a lot on the 5 minute during the market open or during the New York trading session. Let's see if we've gotten any recently. Nothing on YM, which makes sense because, well, there's kind of one over here. Yeah, I haven't had one in like a week or so for YM. So we have one here. This was January 22. So we can see here pretty much price heading down, low. Well, let me actually zoom in a little bit. So we have this low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. But then finally, we get a higher low. And then price reverses back to the upside. So for example, here we have this 2-on-2 bullish reversal, but it's probably just a pullback before it continues in the bearish trend, right? I want to see at least market structure potentially start shifting to whatever that may be. So here we have the higher low, which is letting us know, cool. It looks like sellers are running out of steam because they can't continue bringing it back down as they did on this leg up here. Because every time it came back up, they just shorted it right back down. Brought it up, shorted it right back down. Same thing here. They shorted it down. However, there was a bullish reversal in the right area or the bottom right area down here, as opposed to just a flush as we have for these, right? So the higher low is what gives me confidence in the setup. Cool. Before we wrap up, any last questions you guys have? And if not, what was the biggest thing that you guys learned today or something that you'll take away?
Well, your comparison between SMC and the Strat was really enlightening for me. Like I got the idea, like, oh, okay, I can actually see how these fit together and to some degree, perhaps describe the same types of price action just in different terminology.
Yep. And what I definitely recommend as well if you are going to like study the strat, learn it like in and of itself, and then once you get comfortable with it, see how you can combine it like with SMC and stuff like that. Because like if you try to combine it and you don't like know the fundamentals of it, it can be a little jarring at first. At least I found.
All right, will do. Thank you.
Cool. And just my opinion, since you mentioned you had your first green week, I would probably paper trade a bit, make sure you have real-time data, and just start collecting as much info as you can to like get down pack. All right, like cool. This is my preferred setup, whatever that may be. And then I'm only going to be looking for this. That way you can minimize the like poor or the poor setups, right? And just focus on the better ones.
All right, thank you.
Absolutely. Excellent. Cool. Yeah, the overall concept of the strat, excellent, eh? Definitely glad it helped. Cool. Thank you guys, as always, for coming out. We have these every single month, so feel free to use the same link that you used to sign up for this one is the same link to sign up for the next one. Tao, I'm gonna send you an email, so check it out in like 5 minutes. You'll see it there, and we'll talk.
Okay,
Yep.
thanks.
Thank you guys again for coming out and asking your questions, and I will see you for the next one. And feel free to message me if you have me on Discord, or email me if you don't have me on Discord, or wherever you know me from. And uh, let me know about your progress because I always like hearing from you guys. All right, I'll see you guys
Thanks. Have a nice night, everyone.
too. Bye.